So I'll tell you right off the bat as we pull up this Aussie CAD that I'm not a big fan typically of cross rates other than those yen cross rates. So to say that I've been actively trading the Aussie CAD, not true. Although I'm looking at this daily chart and I see what we're lacking on a lot of our majors, which is a directional bias on the daily. This is kind of nice. 4 to 6 o'clock. Just sliced down through the 200 period simple. We see that the 200 period simple is in play here as resistance now. Love that. So far, I'm really liking what I'm seeing. I might have to reevaluate my love of the Aussie CAD right now. Now, just remember, if you get into some of these cross rates, just consider your cost per entry. In other words, what's the spread? Because that's our cost for entry. You know, the other thing you can do is if you're brand new to the Aussie CAD, let's say you're going, you know what, I like this chart. It's very interesting to me, but I don't know much about this pair. What's cool is we can absolutely shift gears very quickly. Head on over to the power stats. Because what power stats will allow us to do in short order is kind of get to know a pair that we, one, haven't traded in a while, or two, haven't traded at all. So if this is a pair that's brand new to you, you know, or if you're thinking about trading a pair like that, what we want to do is head on over to that search criteria, which I don't even have it up. You can see I traded the Euro CAD not too long ago, but I don't even have that up here. So we're going to have to actually set up that search. So no problem. Pull up the Aussie CAD and create that search criteria. And then what I'll do is look at the analysis. So this analysis right here that you see on your screen, that'll probably be more applicable to when and if we actually go ahead and set up a trade for the near term. And maybe we might have one, in which case we'll come back to this projection over the course of the next 15, 30, 60, 240, and daily candles. We can come back to that. But what I'm interested in right now is the movement per hour. So the movement per hour is going to give me an idea what the rhythm of this particular pair is. And that means when this is the Aussie yen. That's not going to help me. Let's go to the Aussie CAD. I know I just set that alert up. It's always good to look at the right symbol, is it not? Aussie CAD daily. Okay. So I'm setting up the Aussie CAD daily and intraday search. Let's try this again. So again, what I'm just trying to do is get an idea for the rhythm of the pair and also the pip movement range, because that's going to have an effect on how realistic it is for me to see certain lines and levels in the chart when we start drawing them, how realistic it is to see those. There we go. And what the typical pip movement is. So first off, just by looking at this graph, I can see that it's not that dissimilar to other pip movement ranges that we've looked at in the past, where we look for that typical pop between 9 and 10 a.m. By the way, this is a 24-hour clock based upon Eastern Standard Time, so I can see the pop between 8, 9, 10 a.m., a little bit of a drop-off after 11, 12 a.m. going into the lunchtime doldrums. But what's interesting is this Aussie CAD is fairly active, if not just as or more volatile, depending on the hour, during the 8, 9, 10, 11 o'clock hours. So this is kind of unusual. Look how active this thing is in the Asian session. Very interesting, right? How often do we see that? We've looked at these graphs many, many times across multiple pairs. But how often have we seen this kind of movement in Asia? Very interesting. So, you know, kind of log in the back of your head. First of all, we're going to see on average about 15 to 24 pips. That's an average across the 24-hour clock. On the higher end, we could see the volatility carry this thing up to maybe about 36, 37 pips. Okay, you can see the high end here. But on average, we're about 14 to 24 pips in that area. And we're going to average about that 22 to 24 between 9, 10, and 11. Okay. We see the pickup with 7 and 8. That's not unusual. We see the initial pickup with 2 and 3 a.m. Again, not unusual. See a slight drop off at 4 with the Asian close. So what do we have at 2? Paris and Frankfurt, little pop. London, little pop. 4 a.m., Asian close, little drop. Right? And then kind of wait and see until New York gets going. But take a look. That 8 o'clock hour is very interesting. And we're not exactly quiet. So if you're trading Asia, this could be a pair to take a look at, that Aussie CAD. So now that I know what the typical pip movement range is, I'm not completely unfamiliar with this pair now. It's amazing how just that quick little stop will give me a better idea of what this beast does, right? So jump on over to some intraday looks. You know, get our 5 minutes going here, get our intraday looks going here. And I'll go ahead and save this as a profile. It's not one that I keep. There we go. So now what I have is a look. I know that I've got a bearish directional bias. So right away, I know that for the most part, as I start scanning, I'd rather be trend following. So if I have a 5-minute trend follow, which we do, between the greens all the way, no problems. We got that covered. 15-minute next short-term time frame. Yeah, the headache with this particular trend is the fact that we haven't seen a lot of respect for the wave, or a lot of steadiness in the wave, I should say. So I'd probably put this 15 on the back burner. Not wild about what I'm seeing here. If I'm going to take advantage of weakness, that 5-minute seems to be a clearer psychology. Jump out to the 30. Now we're talking about a really nice short-term intraday swing trade. See the difference between the 15 and the 30? I want to see that the time frame I'm looking at and the wave that it has is able to contain these corrections. One, reach them. I want to reach my entry area, which here is between the 20-period simple and the 34 EMA low. I need them to, one, reach them, but then I need that area to be respected as resistance. Every time I say that, I always hear Fredo in The Godfather go, "I want respect." That's what I always hear. But that's really what it is. This is Fredo, right? I want respect. If we don't see the respect here, what's the point in using this as a zone in which we would expect exhaustion? That's the bottom line, right? So when we look at this move lower in terms of the trend, it often, when a market's accelerating away from the wave, unless it's gone parabolic, it sometimes feels like it's never going to come back to you. Now, in those situations, just kind of to deal with my impatience, sometimes I'll say, you know what, just out of curiosity, maybe I'll just pull a Fibbo and look for some extensions. I'll look to project some downside targets. And sometimes I'll just do that to quiet the pig in the head. The pig in the head that's saying, oh, is this ever going to correct? Whatever it takes sometimes just to deal with my own psychology. I need to quiet my psychology to deal with the market psychology. That's the battle between internal and external. I think our job is to obviously measure and respect the external psychology, the market psychology, right? Our internal psychology, our only job there is just to shut the pig in the head up, right? Talk about renting space, or we want to keep our minds as open to what we're seeing and not what our bias is or what our opinion is, or manifesting something that isn't justified on the charts. We want to keep it as open as possible, and that's that internal psychology. The baggage that I keep from a past losing trade, the arrogance that I'm keeping from a past winner, all that stuff, that's internal. I think sometimes traders forget that they get lost in that whole internal psychology, and they forget that really its only aim is to make sure that your external, your analysis of external psychology, market psychology is better. So right now, could we keep going down? Could we maybe find support around 350? I don't know. But sometimes I'll just do this just to give myself some some parameters for where the bounce may occur. Psychological levels can do that too. Sometimes it seems like we're never going to get the correction, but I hope you've seen just in the couple weeks that we've been here in the TTM chat room that we often do get the correction. And if you're feeling impatient and you want a shallower correction, no problem. 5 minutes seems ready to go. I could pull up the between the greens here and look for those opportunities between the 13 and 21. So I don't need anywhere near the type of sizable correction, say the 30-minute is asking of me. So I can look at the 5 and I can look at the 30. And both those would be trend following. By the way, I can look to the 60 too. But why would I prefer the 60 over the 30 over the 60? Well, the 60 is moving lower. It's got corrections to the 20, period simple, but not much more than that. I'd like to get a full position size on. I'll go with the 30. But really either one will do here, and both are trend following because we have that really nice bearish directional bias here. Sweet.